is Will McIntosh. I'm Global Head of Research for Affinius Capital. I think investors need to realize that I think we're going to be longer term in a lower interest rate environment. And the reason I say that is we've got a population cohort now, the echo boomers, that's a much smaller group, and they're moving into the period of time over the next, call it 5 to 8 years, where they're going to be driving the economy. 70% of our economy is driven by consumers, and this smaller group is going to be the ones that are in their peak spending years. I think in order to keep our economy moving at the growth rate that our government is looking for, you're going to need to keep interest rates lower to help stimulate the economy. And as investors, they need to recognize that that's the environment we're going to find themselves in. Investors are going to be looking for returns. I know many of the pension funds are being told by their actuaries that they're looking for a 7% or 8% return to be able to meet their liabilities for their beneficiaries. So I think it means that investors are going to need to look more toward alternative investments and maybe up their allocation to the alternatives, which provide opportunities to generate a higher return relative to other investments that they might select. It could be real estate, could be private equity, those sorts of investments. They all offer, I think, the opportunity to help them do a better job of meeting their return requirements that they're looking for. And I would even say that within real estate, for example, a lot of that capital may be moving more toward value add and opportunistic investments, which tend to provide higher returns in the real estate world. Investors are struggling to understand where values are today. And that's one reason we have a huge bid-ask spread between what sellers think they should be receiving for their assets and what buyers are willing to pay. And so it's going to take some time for price discovery to work its way through the system. And I think when that happens, we'll see transaction activity pick up. Even the valuers, the appraisers, are struggling to get a sense of where values are today because very little is transacting and there's not a lot of evidence as to where values might be. As the government moves in to try to impact the market and keep them and help make the market more stable, they'll enact regulations to try to help that happen. And unfortunately, we don't know always what that's going to be, and it makes it challenging for us as investors to try to anticipate what the new regulatory environment is going to look like. Sometimes these regulations can have a huge impact on the market and a huge impact on what investors can and can't do. What does keep me up at night is worrying about what the new regulations might be that are coming that I can either maybe see and worry about, but there's some regulations that show up that I'm not prepared for. And I worry about what the government's going to do that might have a huge impact on our industry and certainly on our investment activity.